Hello, chart watchers, and welcome to this Thursday, September 13th, Market Watchers Live Show with your hosts, Tom Bowley and Erin Swinlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Taking a look at the action so far today, you can see the Dow Jones Industrial Average currently up 151 points. Once again, trying to flirt with this 26,200 level where it failed back at the end of August. The S&P 500 continues rising off of its 20-day test, up another 15 points today. Moving back above the 2,900 level. 2,916 was that all-time high back on August 29th. The NASDAQ up 73 points, nearly 1%. So on a relative basis, outperforming, moving back up above the 8,000 level. Russell 2000 just doing nothing, meandering sideways near its 20-day moving average. It is flat today. 10-year Treasury yield hit 298 earlier today, but has pulled back, currently at about 2.95%. Volatility continues to dwindle and drift lower and lower as the market's bullishness continues to gain steam. Technology leading to the upside. Technology had a rough day yesterday, especially internet and semiconductors, but the groups are moving today, especially the semiconductors and hardware. But technology, you can see up over 1% today. This is the computer hardware index. We've spoken about this recently with Apple bouncing off the 20-day. That certainly helped this group, and we are moving back toward all-time highs here. Semiconductors made a pretty important kick save earlier at an important level. We'll talk about this a little bit more in just a bit. Consumer staples pulling back after nearing multiple month highs. 55 is an important level on the XLP. Kroger came out with earnings today, actually beat top line, beat bottom line, and the market didn't care. Down almost 10% today, and that is leading the food retailers lower, but this is a group that's been pretty strong and resilient. I suspect we will see a bounce back later from this group. All right, Erin, I'm a day away from Hurricane Florence. It's just stalling. I think it's teasing us out there on the coast. How's your weather out there? It's got to be better.
Yeah, come on. My weather's pretty dull. It was actually 56 this morning, though, when I was outside with my coffee. But the high will be 93, and I have no idea what rain is. I haven't seen it in months, so
well,
it looks
56.
like you guys are going to get all the rain for the West Coast, all in a day.
56 could be the number of inches of rain we get, based on this thing stalling. They're talking about high pressure systems, and it's just kind of been weird. Normally, hurricanes, if you follow them, they come up, they hit the coast, and then they go right back out, kind of in a northeast fashion. Following the jet stream, but it's just been a weird setup here. So there was a high pressure over Bermuda, I guess, and the hurricane stayed south of it, literally coming directly west, hasn't really gone much north, and it's actually even like west to southwest as it hits the U.S. Really weird. But anyhow, I think once this high pressure lifts over the weekend, it'll start to move back toward the north again. But it's forecast that it could just sit here for a few days. I know our forecast is for rain all the way through Sunday, so it's going to be a drenching weekend for sure.
Wow. Indoors.
Yes, and of course we have Grayson Roze. And Grayson, I don't think you all have any hurricanes up there in Seattle. What's going on up there?
We do not have any hurricanes. That's a good point. Actually, I went running outside for about an hour last night, and it was after work, sunny. It was perfect. The temperature was great. So Tom Bowley, I'm sorry. That probably didn't make you feel very good.
No, I'll probably be doing a lot of exercising this weekend, too. It'll probably be swimming and paddling.
That's good. You'll look like Michael Phelps out there or something like that. That'll be good.
I might need to. I've been trying to lose weight. I might. It may not be a voluntary thing. It may be involuntary this weekend.
You're going to have to swim to save your life.
Exactly.
No, seriously, I do want to wish everyone the best out there, though. It's quite the storm, and I mean the news coverage has just been incredible. So I hope that it's all just a lot of hype, but I do want to wish everyone a good couple of days. Hope that everyone stays safe out there. So.
Yeah, the strength of the storm has been reduced. It actually was a Category 4, and they were fearing it could be a 4 when it came on shore, but it has been downgraded to a 2.
Yeah.
And the thing is, it's weakening while it's just kind of sitting out there, which is good on the one hand, but thare saying the storm surge is still going to be catastrophic.
Yeah.
And so keep your prayers in line for all those on the coast, because those are the people really going to need it this weekend.
Definitely.
Absolutely.
Okay, well, hey, you're here for scooters today, right? You're going to talk to us a little bit about scooters?
We're going to talk about scooters a little bit. This is actually kind of based on a presentation that I did at the TSAA conference down in San Francisco a few weeks ago. But it was received well, and I think it's an important topic. What I'm going to basically cover is how I use scooters, and most importantly, how I think you should not use scooters. We see a lot of people that I think use scooters in the wrong way. So we're going to cover that and I think have some fun. So we'll see.
That sounds good. And everybody should know that scooters are exclusive to StockCharts.com. This is not something you're going to find anywhere else.
That's true.
Developed by John Murphy. Absolutely, I think should be some kind of a part of your trading or investing strategy. So looking forward to hearing from you in a bit, Grayson. We'll bring you back in about 15 minutes if that's all right, my friend.
That sounds great. I'll see you guys then.
All right.
Well, I hope I don't find out that I'm using the scooters wrong. That would be kind of a bad thing.
I'm sure I'm using them wrong. Grayson always corrects me, though, so we're in good shape.
Yeah, he keeps you in line. All right, this week, Mary Ellen McConigal is going to join me tomorrow in case Tom is unable to be here because of the storm. She's graciously said she'll step up and co-host if need be. I will be doing a workshop on Tuesday. I think I'm going to do it on step-by-step scanning. If that sounds interesting to you, fill out the survey. That'd be great. David Keller is going to join us on Wednesday. I'm excited to talk to him again. And the popular Julius de Kempener, RRG, Mr. RRG, will be here on Thursday. So that should be, we've got an incredible week. But don't we always? We have an incredible day. Grayson Roze is here to talk scooters, as we hinted at earlier. 10 and 10 to 1, our first symbol is going to be IBM. And finally, chart breakouts at the end of the show. We'll show you some of the symbols we're seeing that are breaking out right now or getting ready to. So let's go ahead and get started, though, Tom. Technical news and headlines.
Yeah, we've got some more news out this morning. A little bit of economic news. Initial jobless claims once again came in below expectations, 204,000 versus 210,000 expected. So that was 2 weeks in a row having very, very low readings, numbers we haven't seen in many, many, many years, actually several decades. Then August CPI came out, and it was less than expected. It rose 0.2%. The market was looking for 0.3%. Core CPI rose just 0.1% versus an expected 0.2%. So for the second straight day, we had some pretty good inflationary news. Yesterday was on the producer level and today consumer level. So not bad. I mean, if you're the Fed, you don't have to worry about raising rates too quickly based on inflation. So they can simply look at the economic activity and try to decide from there. I think they can continue to raise rates slowly. And I think that is what the market is hoping for. Taking a look at the 10-year Treasury yield here, you can see we did get up to 298 earlier today. The high actually hit 2.983. 3%, 3.01%. That's a major short-term resistance level where we have failed on multiple occasions the past few months. We're getting close again, clearly in another uptrend after we bounced off of that support at 2.81. So that intermediate term range continues to be, I'm going to say even short-term range continues to be about 281 to the downside, 3% or 3.01% to the top side. Let's see which way we break. I know the PPO looks good, so you think you're going to go through, but look at what we've been doing the last few months. When you get into a trendless market, I think the PPO, the moving averages, a lot of these things are really difficult because they're more trend following types of indicators. And when you have no trend, they simply give you one false indication after another. So I'm not really paying any attention to the PPO here. I'm not paying any attention to the moving averages. What I'm paying attention to is this range, 281 to 301. Let's see which way breaks first. To the overall market and things taking place today, I wanted to point out Kroger. Let's get an update, make sure we got the latest price. And by the way, some of my charts are really slow today. I apologize. I don't know exactly what's going on, but I'll patiently wait for them to come up. But here's Kroger, big gap down today. It's down over 10%. Listen to the numbers, $27.87 billion in revenue. Market was looking for 27.82, so they beat on the top line. Bottom line came in 41 cents. Market was only expecting 38 cents, beat on the bottom line. And they provided kind of, they reaffirmed their guidance going forward. They didn't raise it, but they didn't lower it. And yet the market decided, hey, we need a pullback here. So you got Kroger down. I think long term, this sets up pretty well for Kroger. If you pull up a weekly chart, you'll see that all we're doing, we were strengthening throughout most of 2018. And this pullback is actually an opportunity to enter on the 20-week moving average. So I think this is a stock that looks pretty good. And if we pull up the group that it's in, which is the food retailers and wholesalers, check out the chart this year. The chart's been pretty strong. And yes, the group's pulling back because of Kroger's weakness. But overall, I think this is a pretty strong group. And if we go back and take a look at Kroger and pull up the relative chart, we'll see it's not the best performer in the group. If you're looking for the best performer, you have to do a little bit of work. But on a relative basis, it had broken out versus the S&P 500, and it had been rising on a relative basis versus the S&P 500. So I'm still okay with Kroger. I do think with this gap down, it's probably going to come back and test this level around 27.5. And that would actually be a pretty solid reward to risk entry into Kroger if it gets down to that level, because that's where we've seen the buyers step up in the past few months. That's something just to keep in mind. Now, for a stock that really just fell apart, and I remember probably a few days ago, maybe a week ago, talking about two software stocks, one being Oracle. I thought they reported this week. They actually report next week. And talked about on a relative basis how it's been such a weak performer versus software, and that maybe, shouldn't expect too much from this company. And then on the other hand, we had Pivotal Software, PVTL, which I really liked. And Pivotal, in a strong software group, had actually, since it went public, been performing pretty well. It was kind of uptrending. And so I came to the conclusion that if you're expecting a strong earnings report, you'd really expect it more from Pivotal than you would from Oracle, because the market has been accumulating shares there. But this is the primary reason why I will not hold stocks into earnings. The stock came out, they beat on the top line, 164.4 million in revenues, 158.3 was expected. They beat on the bottom line, losing 6 cents. The market was looking for them to lose 9 cents. They raised guidance both the upcoming quarter and for the year, and the stock is down 22%. Now, granted, it ran a lot. It came out as a public company at 15, ran up to 31 in about 2 months. So, I think this is an opportunity. Actually, just full disclosure, I told Erin and Grayson right before the show that I was running in to buy the stock, because I beating top line, beating bottom line, I think we're down pretty close to a key support area. I'll take a chance with it. I think it's overblown, but we'll see. I might be getting stopped out later today. But PVTL, I still think, and this is a little bit of how I look at my strong earnings chart list. I don't necessarily just look at the reaction to the stock. If it's been in an uptrend and it's in a strong group and it pulls back and it hits a key support level, I may give it a chance to see if it reverses to the upside. So anyway, wanted to mention that. The last thing I wanted to mention, I'm going to turn it over to Erin. Semiconductors. After nearly breaking down, you can see the semiconductor index here. 3350 was a big support level. We got down to 3300 yesterday, but look at that reversal. That is a beautiful reversal. Dragonfly doji, essentially, and now look at the bounce today. Semiconductors holding support, as I would hope. And now we got some upgrades and downgrades. Erin, what do they look like?
All right, let's get to it. Some pretty interesting ones came in today. Let's get over to that. All right, so I'll start with our downgrades right now. Sienna Corp was downgraded today, and I have to say I agree with the downgrade. I am seeing a descending triangle. These are bearish patterns. The expectation should be a breakdown, and if we do get that breakdown, this gap, I would be looking for that gap to close way down there. So we could see quite the drop. Notice also that the PMO is starting to turn over on this one. I did do this in a 6-month chart just because I really wanted to highlight that chart pattern there. And, I guess if you want to be optimistic, you could talk about this being sort of an unusual flag formation. But I just, the PMO is overbought and it's trying to turn over. So I wouldn't be looking at this as a flag. All right, another downgrade, Texas Roadhouse. This one I thought was really interesting on the downgrade. I mean, I would probably add this to the watch list. Yes, it's down over 1% today on the downgrade. In fact, let's see, BTIG research moved it from a buy to a neutral. And oh, let me just tell you, Sienna was moved by Morgan Stanley from overweight to equal weight. So that wasn't a terrible downgrade there, but I still have issues with CIEN. But Texas Roadhouse on the downgrade, I think could be interesting. The only issue is the PMO is overbought and it is trying to turn over. But this is some pretty important support here. It is falling back after, really, when you look at it, almost a parabolic move to the upside. So I would expect to see a pullback, and if it can hold that support level, I wouldn't be quite so worried about the downgrade coming in. Wayfair was downgraded today by B of A from a buy to a neutral. So they didn't move it to a sell. They're not expecting it to do much. So my guess is we might see a pullback to this area of very short-term support. I drew it off of these two tops right here. Let's see, where are they in the... Yeah, right in here, these two tops. So, I mean, it's very much very short-term support. The actual support, in my opinion, the next one is going to be this top back here in July. But I think it might hold that 140 level. You know, with the hurricane and everything, I've actually heard that this one might benefit. And look at the PMO and the OBV and a strong scooter. You know, I appreciate when these get downgraded, but remember, this is only to a neutral. So they're just saying not to add it to the portfolio necessarily, but I think I would add it to a watch list. Upgrades, Intel. We saw Intel upgraded today by Northland Capital from an underperform to a market perform. So I think of that as more of a neutral signal there. And you know, I got an actual neutral signal on my trend model, the intermediate term trend model, all the way back here at the end of June. So we already had some notice that we might be looking at a switch in the trend in the intermediate term. We'd already seen it in the short term. And although we had a bit of a rebound, never could get above that 50-day EMA. Trying to come back up here and test that overhead resistance. But look at the 50-day EMA, just about ready to cross below the 200. The PMO, the best I could say is that it is oversold, but it is not rising. And I would be interested to look at how oversold this may or may not be on that PMO. So I'm just going to increase the years here. And as you can see, the -2 to +2, I wouldn't look at that as the range. I would be looking at a 4 -4 as the range. So it really could fall further. The PMO could handle that. Look at, you know, the scooter. I'm not thrilled with Intel, and I suspect if I were to use, I don't know that I have it on here, Tom's relative chart, I suspect we'd be seeing this one very much underperforming in its industry group. So I'm not liking this, even though it was upgraded, but it was upgraded to a market perform. So again, it wasn't given this huge, wonderful upgrade. Methanex Corp. And this one was upgraded by Raymond James from a market perform to an outperform. Those are kind of the upgrades I want to see. It is a little bit on the overbought side, but you can see it's trying to break out of a rising trend channel it's been in that it's been traveling in since the end of July. And, you know, again, I have some really positive indicators here. So great on the upgrade, but, you know, we're up almost 5% today. I might look for it to pull back down into this rising trend channel just a bit more. You know, we do have the breakout, the short-term breakout here, but I would put it on the watch list, as we say. I'd be a little bit nervous on that one. And finally, the last one I have is Thomson Reuters. Morgan Stanley upgraded this from equal weight to overweight. So that's a nice upgrade. You have the breakout here from this. Honestly, I think if you went in here, you could make a case for an ascending triangle. But we got that breakout. We have certainly some overhead resistance getting ready to hit at 47. But I was like, is this a problem with that PMO? And again, if you're worried about whether they're overbought or oversold, let's take a peek. All right, it looks like 3 to -3 is probably what you're looking at as far as a regular or a normal zone. But honestly, I could make a case for -2 to 2. So I would say this is an overbought PMO on this upgrade. That's all I have as far as the upgrades and downgrades. So let's go ahead and Grayson, let's bring you back in for your talk about scooters.
Hey guys, I'm here to talk about scooters.
Welcome back.
Hey, I'm looking forward to this. I've been on the show in a while now. It's been, I was trying to think of it this morning. What, a couple months now?
Yeah, well, certainly before ChartCon.
Yeah.
It's been way too long.
Yeah.
Way too long.
Way too long. Well, I think we're going to have some fun today because we're talking about an indicator that, Tom, like you mentioned, is sort of proprietary. It's exclusive to StockCharts, which is fun. But it's also one that a lot of people use, especially, I know you guys both use it occasionally to varying degrees. Greg Schnell is a big proponent of scooters. So we've got a lot of people on the site that talk about scooters. I wanted to sort of dive into them, make sure that everyone knows what they are, and then I also wanted to cover how I use scooters. I think the way that I use scooters is somewhat unique, especially for what I'm going to show you, the sector rotation stuff. But then possibly the most important piece of this is how not to use scooters. I was having some fun the other day and talking to Arthur Hill about scooters specifically, and we were having a whole conversation about the strengths and the weaknesses of the indicator. There are weaknesses. There are weaknesses to any indicator, and we're not going to stand here and say no, scooters are absolutely perfect. There are things that you've got to know, you got to understand before you start using an indicator like this. So we're going to sort of cover those, and I'm going to show you how I think you should not use scooters, which is equally as important as how you should use them. So covering scooters, for anyone who's kind of sitting here going, hang on, what are we talking about? Those things with 2 wheels that roll down the street? No, what we're talking about is the StockCharts Technical Rank, SCTR. So scooters are a unique technical ranking system that we've created. What we tried to do really was take John Murphy's approach and bundle it up into sort of one number. But we've got this unique technical ranking system that takes the same criteria, which is key, and applies that criteria to a group of stocks and assigns a number from 0 to 100 to all securities in a specific group. So what you can do is you can look at large cap stocks, mid cap stocks, you can look at US ETFs, you can look at UK ETFs. There's all these different groups that you can look at, and the same criteria is going to be applied to everything in that group. So there are 2 keys. Again, same criteria. I'm going to show you why that's key in just a second. But what this also allows for, this is the other key, is that it allows for these direct and instant relative strength comparisons. What you're getting is this ranking from 100 to 0, from 99.9 down to 0.01 of all the stocks in that group. So you can compare, because it's the same criteria, you can compare that number across everything in the group. Now, what's cool about scooters too is that you can chart that over time. It's constantly updated. We're calculating it throughout the day based on the current charts. It's calculated in real time. And then at the end of the day, there's a final number. Once the stock stops trading, once the markets close, there's a sort of end of day scooter value. We can chart that over time, and we can see strength and weakness sort of develop. We can see strength and weakness ebb and flow for a stock by charting the scooter value over time. So we can display this in 2 ways. We do this on the site. We have a scooter report page, which is crucial. I use the scooter report page a lot. It's a great place to go to find new stocks to trade. The scooter report page allows you to select your group with that big blue drop down up at the top. You pull that down, you select your group. In this case, we're looking at large cap US stocks. And you can select the period too. This is intraday. You can see how things have changed over a week. There's a couple different options there, but it's going to start at 99.9 and it's going to go down, and it's going to go all the way down basically to 0, and it's going to rank everything in that group. So it's a great place again to find stocks to trade, stocks to look at, I would say, because you've got this list that's the same criteria applied to everything in the group, and then ranked, which is really cool, really unique. So the other thing that I mentioned is this indicator panel. So when you go to the Sharp Charts workbench, when you pull up a chart, you can actually select the scooter indicator and chart that as a panel, just like the MACD or the RSI, anything like that. You can chart scooters over time. So what you can see here, this is actually a couple weeks old. But what you can see is a stock that's gone from a very low scooter value and then gapped up, had some recovery. This is Chipotle, and it's recovered up to a high scooter value. So I chose this specifically because it goes from a low value to a high value in one chart, which is interesting. For those of you also who are wondering what that purple line is across the chart, that's 75. That's a scooter value of 75. It's just a horizontal line. Greg Schnell does a great job of talking about this. I actually got the idea from him. Give him full credit. But think about it. You've got a ranking from 0 to 100. So if you take that ranking from 0 to 100 and you say, I'm going to look at everything above 75, what you're looking at is the top quartile. You're looking at stocks that are outperforming 75% of the rest of their group, which is a really key level. So what I'm going to talk about here, how and why I use scooters. I use scooters primarily to filter the markets and make the markets more manageable. So here you go. Why I use scooters? I use scooters to make the markets more manageable for me. The reality is that there are thousands and thousands of stocks out there that you can trade. Now you got ETFs, you got mutual funds. There are thousands of things that you can look at on a daily basis. I mean, if you're a trader, if you're an investor, if you're looking at the markets at all, there are thousands of things that you can look at on a daily basis. When it comes time to actually pick something that you want to buy, there are thousands of options out there. And the reality is you can't look at them. So what I'm always trying to do is narrow my focus. I'm trying to say, okay, I'm going to trade large cap and mid cap US stocks exclusively. I'm going to play the rest of the world and other asset classes and things like that through ETFs. But individual stocks, let's say I'm going to trade large cap and mid cap US stocks. So now by going to the scooter list, I can say, well, that's still a pretty big group. I only want to look at things that are above 75. That narrows sort of my investable landscape, if you will, and makes the markets more manageable for me. So primarily why I use scooters is to make the markets more manageable. I use them to filter the number of stocks that I can look at, which I'll show you here in just a second. And I also use the scooter value charted over time to kind of keep an eye on my positions. I keep an eye on stuff that I'm watching, stuff that I call stalking. I also keep an eye on stuff that I own, obviously. And the scooter value is just kind of a piece of that puzzle. It's not the only thing I look at, but it's a piece of the puzzle. I'm watching the scooter value and seeing how it changes over time. When I charted it there with Chipotle, you can see that here, I'll go back. You can see that the scooter value is moving. And so if you're watching that, it's an interesting indicator when combined with other indicators that you're using. So the last thing that I do with scooters, which I'll dive into here, is I use scooters for sector rotation analysis. And I'll tell you why that is a good idea. That's sort of the unique piece of what I'm talking about today. So let's talk for a second here about how I don't use scooters, how I think you should not use scooters. Scooters should not be a single standalone indicator. There is no one number, there's no one holy grail indicator that's going to give you all the signals that you ever need. That doesn't exist. Stop looking for it. Scooters are not that. And I, as a representative of StockCharts and as an individual investor, I'm standing up here today and I'm telling you right now, scooters are not a single standalone indicator. They need to be paired with other things. So I have a whole trading system behind my use of scooters. It's part of my methodology. It's a piece of the puzzle, part of the system. It's not a single standalone sell signal. I'm never going to sell a stock purely because the scooter value drops a little bit. It's an interesting reason to look. That's what I call it. It's a reason to look. So a stock with a high scooter value, it's an interesting reason for me to say, hey, I'm going to go check out that stock. If I own something and the scooter value starts to drop, it's an interesting reason for me to say, should I look a little more closely at selling this thing? But again, it's not a single standalone buy signal, sell signal, it's not a standalone indicator. It has to be paired with other things. We see a lot of people that talk about scooters, and they complain about scooters because they say, hey, you know, in the case of Chipotle, this thing went from near 0 to near 100 in a relatively quick period of time. Well, if we go back to Chipotle, again, I chose this because you get to see how, you know, scooters go from 0 to 100. But if we look at this chart, that is a massive, massive gap up. And the scooter formula is relatively simplistic. We published it online. You can go into Chart School and you can find it. Finding a formula that's not thrown off by massive gap ups in a stock like this is very, very difficult. There are things that sort of throw the scooter formula for a loop. And so occasionally we'll see stuff like this where the scooter value kind of rockets up after a major gap up, and it's a little bit thrown off. But again, if you're using it as sort of a piece of the puzzle, an interesting reason to look, or a filter to find new stocks, these things don't really bother you. If you're using it as the only indicator that you look at, then yeah, these sort of major whipsaws, I guess you could call them, in the scooter movements can be concerning. Now, I bring that up for a specific reason because it relates to what I'm going to talk about here with the sector strategy. But I want to talk at the stock level, before I get into the sector stuff, I want to talk at the stock level how I use scooters. So I use scooters, I sort and filter stocks by their scooter value to quickly avoid underperformers. Again, I'm trying to sort of narrow my investable landscape. I'm saying, okay, there are 500 stocks in this group. My reality is I can't look at 500 stocks. I've got too much going on. I need to look at 50 stocks, or even maybe 75 stocks, 100 stocks, whatever it is. I need to narrow that landscape down. So by taking one of these groups like mid-cap US stocks or large-cap US stocks and saying, I'm not going to look at the chart if the scooter value is under 75, it's a way for me to limit that sort of investable landscape. And it makes the market more manageable for me. There are tons and tons of stocks still left in that list of scooter values above 75. I mean, you still got 50 to 100 oftentimes in that group. So it's not like I'm narrowing myself so much that I don't have anything to look at. But again, it's narrowing that down, and I use scooter values to sort and filter stocks to avoid underperformers. If it's got a low scooter value, I'll move on. I'll find something else. There are plenty of stocks out there for me to trade. I chart the scooter value over time, and I pair that with, again, the rest of my analysis, which is trend, money flow, momentum, and something that I've talked about on here before. I call it the Fantastic Four analysis. It's basically a top-down relative strength strategy that I use. There's actually a video back from a couple months ago, probably the last time I was on here, where I talked about that strategy a little bit more. So if you want to go find that, you can do that. But and again, I monitor the scooter value for my open positions. It's not the only thing I'm looking at, but it's a piece of the puzzle. It's something that I'm keeping an eye on. When I talk about sorting and filtering by scooter value, this is something that I wanted to show. I want to show you how to do this. And I'm not doing it on the live site. I'm just doing it here in the presentation. But this is a scan that I've run. Okay, I've got a scan. It's actually called the Rising Scooter Above 90 scan. It's sort of a modified version of a scan that Chip loves to use, actually, which I like to run once a week just for fun. So I've run this scan. I've come to this page. I've got a data table here with a bunch of stocks in it. In this case, it's got 15. So what I do is I first sort by scooter. I've got the little green circle there. You can see it here. I click scooter, and what that's going to do is sort that table by scooter value, from the highest scooter value down to the lowest. Now, our tables on stock charts are set up so that you can sort of sort by 2 levels. So my second step is to sort by U, which stands for universe. So I want to organize things from the highest scooter value to the lowest, and I want things grouped into the different universes, scooter universes or groups that they belong to. So what you can see is that first I clicked scooter, then I clicked universe. Now it's sorted by scooter and universe because we've got that 2-factor sorting. And so what you can see here is the first group up is ETFs. There's only one of those in this scan. Then I've got the large cap stocks here. And so from top to bottom, I've got the large cap stocks. Oh, this is actually reversed, but Mid-cap stocks are next. Small-cap stocks are after that. So what I can quickly do is say, here's a group of stocks, large caps. Here's a group of stocks, mid caps. Here's a group of stocks, small caps. And I can look from top to bottom at their scooter values. It's a really quick way for me to run a scan or find a list of stocks and sort it by scooter and sort it by universe, and then just click open the ones that I think might be interesting. I'll click open the stuff that's in the 90s, click open the stuff that's in the 80s, and I can breeze through those charts and find interesting stocks to look at. That's what I'm trying to do here with scooters, is find interesting stocks to look at. And I've got, again, my whole methodology behind it when I actually pull up the individual charts, and that's what I rely on to make, sort of final decisions. But scooters allow me to filter large groups and find interesting stocks to look at within. Here's, just in case you want it, you can screenshot this or something like that. This is the scan code for that rising scooter above 90. Basically, what it's doing is, in this case, looking at U.S. stocks with reasonable trading volume and cutting out the low price stocks there. But then from there, it's looking at stocks that have a scooter value above 90, and that scooter value has been climbing for a few days. So we call it the rising scooter scan. Now, talked about stocks. Let's talk about the sector stuff for just a second. I talked about the sort of whipsaws that you sometimes get when you've got stocks that gap up. I mean, Tom was looking at that stock that was down, what was it, Kroger's down 20% or something today. That's going to throw the scooter value for a loop. And we're not here trying, StockCharts representative here, we're not trying to argue that. It throws the scooter value for a loop. It's really hard to handle massive gaps like that. Stocks, reasonably shouldn't do that. But they do, and so the scooter value gets thrown off. What I find interesting is that when you use scooters for sector ETFs, think about what sector ETFs do. They don't really gap aggressively. They don't move aggressively. Sector ETFs, relative to stocks, relative to individual stocks, they move much more smoothly. And so because of that, because they move in sort of more smooth, predictable patterns, the scooter value doesn't really get thrown off by sector ETFs. It's not subject to those kind of wacky gaps that you'll sometimes get after big earnings beats or big earnings misses or anything like that. Those don't exist for sector ETFs. So when you track the scooter value for these sector ETFs, you actually get a very consistent, very smooth sector rotation tracking strategy. So I do that as part of my sector rotation analysis. I'm looking at the individual charts of those sectors. I'm using the sector summary page on StockCharts. There's a whole bunch of things that I use. But on top of that, what I also do is I document and rank on a weekly spreadsheet the scooter value and the perf chart position for all of the sector ETFs, the S&P sector ETFs. I do the same thing on a daily spreadsheet. So I'm tracking this once a week on Sundays, and I'm tracking it every day when the market closes. I literally have a reminder that pops up on my phone, my laptop, and everything, and it says, go update the sector spreadsheet as soon as the market closes. So on a weekly basis and on a daily basis, I'm tracking these sort of sector rankings for the sector ETFs. Now what it looks like is this. This is my sector rotation spreadsheet for on a weekly basis. This was updated, as you can see, on the 9th. And so what I get is, for all of the sector ETFs, I'm spitting out the scooter value. I update this manually because I actually like the process of going in. I know it's a little wacky, but I like the process of going in and manually updating the spreadsheet. It sort of keeps me honest. But I'm tracking the scooter value and then the last scooter value. So every week, this column gets copied over to this column, and then I can actually track the changes. I can see sort of how things have changed from week to week. I track their perf chart rank, basically how these ETFs rank on a perf chart, over 120 days on the weekly spreadsheet. I also track on the weekly spreadsheet the RRG quadrant for each of those. And I use SPY here as well because these are S&P 500 sector ETFs. And so when I add in SPY, which is tracking the S&P 500, which is an ETF, so I can actually track the scooter value for it, I can sort of see where things are relative to this broader index, which is really interesting. So then on a daily basis, I kind of zoom in a little bit. Again, this gets updated every day at the market close. Here it was updated yesterday. I track, again, the scooter value for all of these sector ETFs. I keep track of where it was previously so I can see how things are changing. And I track the perf chart rank this time on a 30-day basis. So a little bit narrower view. On the weekly basis, I'm looking at 120 days. On the daily basis, I'm looking at 30 days. So I can also compare these two spreadsheets and sort of see what the differences are. Again, I pair this with other analysis. I'm not only looking at scooter values here. I pair this with my own chart analysis of all the sector ETFs. I do this every single week. I run through all of these without fail. If I don't do that on a Sunday, it's a bad day. So this is kind of the sector chart layout that I use. I've got how it's performing relative to VTI, which is the total market. How is this ETF performing relative to the total stock market? I'm tracking the PPO and looking at trend and charting this thing. I'm looking at volume of these sector ETFs and some interesting things. And again, I've got the scooter panel down here at the bottom. So my point being, this sort of daily spreadsheet routine that I have is paired with, and looking at the scooter values, is paired with traditional chart analysis on these sectors as well. And the same goes for stocks. I'm looking at scooter values in addition to my traditional chart analysis. So, Tom, this is for you. Hopefully that was helpful for everyone, just kind of running through scooters. I'm sure you guys have some questions or something, so we'll keep chatting. But one last note on trend, because Tom, I know you had a question for me that you wanted to ask. I got a picture of Tom in here. Tom, this is you right over here, right? Isn't that looks like Boley with the glasses
that's
on.
Me.
Yeah, that's you. I think that's you. Tom, I know you've gone to a July 4th party, right? You celebrate July 4th every year.
Yeah, this weekend's the hurricane party, but yes, I've been to a July 4th.
This is the hurricane party. Okay. Well, so I want to talk about trend and investing in a bull market. You go to a July 4th party, right? What do? You show up, do you bring your 6-pack of beer, you put it down on the table, and then you say, all right, guys, see you later, and you turn around and leave? That doesn't sound like you. No.
Yeah,
no.
I leave the 6 cans, but they're
it's a little later on in the evening.
I only turn around and leave if I see Tom.
There you go.
Yeah, I don't blame you.
No, when you show up to a party, what do? You hang around. You got people at the party. You have a good time. You bring your case of beer on the July 4th or whatever, and you enjoy the party. You stick
Hot
around.
Dogs, hamburgers on the grill. You got the fireworks.
Exactly.
Yeah, you got the whole thing.
Yeah, you have the party. When I go to a party, I don't sit around waiting for that party to end. Now, I know the party's going to end, especially with July 4th. That's why I bring up July 4th, because July 4th parties have to end. You know why? It's because July 5th comes around. Eventually, it's July 5th. You can't have the July 4th party anymore. So,
Grayson, I know what you do on July 4th and at all parties.
Oh, what's that?
You calculate scooter ranks.
I'm sitting there with my scooter rank. I bring my slides and I tell everyone about the scooter rankings. Oh, no. No, but seriously, when I go to a party, I'm sitting there, I'm hanging out with my friends, I'm enjoying the party, and I know that party's going to end, but I'm not sitting around worrying about it, because slowly people are going to start to leave as the party goes on a little too long, and eventually I'm going to have an exit, and I'm going to say, yep, I've been here long enough, I'm going to get out. The same goes for investing in a bull market. The same goes for investing in strong trending stocks. That's why I'm bringing this up. It's always funny to me when you've got a really healthy bull market like the one that we've had for the past 10 years. And everyone is constantly saying, the party's going to end, the party's going to end, the party's going to end. Well, that's fine. I'm not disagreeing with you. The party is going to end, but I'm still going to stay at the party until it ends. And it's not just going to end in, no July 4th party that you go to ends in everyone panicking, rushing for the exits because they have to leave in the next 6 seconds. It ends by people filtering out the door and eventually comes to an end. And then Tom is left there, at 3 a.m. still drinking beers with his shirt off or whatever because he doesn't want the party to end. But no, I'm just teasing you, Bully. The point is, the party's going to end, but that doesn't mean it's not going on right now. And the same goes for me investing in strong trending stocks. So, for example, I know, Tom, you wanted to talk about this one. You've got a stock like Square. This is a position that I have. It's still an open position. It's still something that I own. But it's been trending. It's been going up and to the right for a long time. And so when people look at a stock like this, they say, here's a stock that's gone from 25 to 80. This is actually from a couple weeks ago, so it's even higher than that now. But people say, this is a stock that's gone from 25 to 80. The party's going to end. The party's going to end. The party's going to end. Well, in reality, zoom this back. It's actually over a longer term. It's a stock that's been trending really nicely consistently going up and to the right. It's a stock that's gone from 8 to 80, not 25 to 80. 25 is here in the middle. So me investing in strong trending stocks, trading strong trending stocks, I like to say don't discount leadership because you're too scared to be late to the party. Don't discount leadership because you're too scared for the party to end. Stocks send you signals, and when you're drawing trend lines and things like that, when they break those trend lines, it still leaves you enough time to get out. So that's kind of my little pitch about investing in bull markets, trend. I think it's key because we're definitely running into the later stages of a long bull market here, and there's a lot of people yelling about the party that's going to end, which is true. At some point, this party is going to end, but it's going to send you signals before it does. It's going to let you know. So anyway,
well, that was a great analogy, by the way, Grayson, and I live by analogies. I love to use analogies. So your investing analogy is just hang in there and wait until the party ends. Enjoy the party. Mm-hmm. And when it ends, then you'll move to the back to the sidelines and go back to looking at your scooters or whatever. But here's my analogy of how this is my trading strategy analogy. So I go to a baseball game, all right, and the baseball game's 9 innings, and of course you don't want to leave in the first or second inning because you got 9 innings to go.
Yep.
But if your team's up 10-0 after 5 innings, I want to beat the traffic out of the stadium.
That's true.
So that's my analogy. I take that 10-0 win, and I get the heck out of Dodge, and hopefully the other team doesn't come back. And
that's true. That's a good analogy.
Speaking of that, I mean, Greg uses the analogy that, if you've got a high scooter, it's like having a high batting average. Do you want to put your money on the high batting average guy or the one that's really low?
Yeah.
So I do have a couple questions for you.
Sure, shoot. Yeah, I kind of veered off track there at the end, but Tom and I have been having a conversation, a little bit of background. We've been having a conversation this morning about trending stocks and some stuff like that. So I thought I'd throw that in there because it's always kind of interesting.
And let's face it, we always veer off track, Grayson.
That's true. We do.
Go ahead, Erin. Sorry.
Oh, no problem. Okay, so one of the questions is, why is it some of the symbols don't have a scooter?
That is a good question. So we manually add things to those groups. A lot of times there are new stocks that take a little bit of time to add. In general, we try to catch as many as we can. We've got a whole data team that's sitting around trying to do that. But if you find something that doesn't have a scooter, that you think desperately needs a scooter, let us know. Actually, we really appreciate those notes from our users. Saying, hey, this thing doesn't have a scooter, and then we go, oh, yep, we got to add it. We have to manually add them to those groups, though. So that's generally why. There aren't too many. Occasionally, you find a stock, particularly much smaller stocks. You find things that don't really fit well into the criteria that define the groups that we have. But let us know. We really appreciate that, and we'll
because I know the question comes in as well, why the industry groups don't have scooters.
Yes, in the like in the sector summary page. So those are true indexes. What we use in our sector summary page at the top level, we use the S&P sector ETFs. But when you drill down into the industry groups, they're actually indexes. They're not tradable. If it's not tradable, we're not going to assign a scooter value to it. So that's where that comes from. But I will say you can find, just like SPY versus the actual S&P 500 index, SPY is an ETF. You can trade it. It has a scooter value. The actual S&P 500 index, which you can chart on StockCharts by using $SPX, we do that all the time, that doesn't have a scooter value, but SPY does. And SPY is virtually the same thing as the S&P 500 index. So for all of those industry group indexes, you can go in and find a corresponding ETF, which will most likely have a scooter value.
Excellent. The other question was whether you would be willing to share that spreadsheet that you have. I know I'll post a screenshot of it in the Market Watchers recap, so if you want to recreate it.
It's easy to, here, I'll go back to it really quick. It's easy to recreate it. This is, for example, the daily one. It's really easy to recreate it. Again, the point I want to make is that I update this thing manually. And I do that very intentionally. It would be very easy for me to automate this thing and just have some page on a site that I go and look at. But I love the process of manually updating it because it takes about 6.5, 7 minutes. I generally go through it a little bit. I can do it in 3 minutes, but I'm generally paying attention to the numbers and the changes and things like that and actually thinking about what I'm doing. But it's a really healthy thing to do at the end of every day, right when the market closes. I take 5 to 10 minutes and I say I'm going to go update my sector rotation spreadsheet and I'm going to look at everything carefully. And the fact that I'm manually updating it, it's a really, really good exercise just to keep me focused on the market and make sure that I'm actually going and looking at the thing. So, but yeah, the spreadsheet itself is really simple. I don't have a great way to share it, but hopefully if you screenshot it, you know, open an Excel document and put in a couple columns, you can do it very easily.
Yeah, and if you're just dying out there to get the actual one, send a request to Market Watchers at StockCharts.com, and if possible, we'll
try to find a way.
But no promise.
What I have built into the spreadsheet, just so everyone's aware, is that I've set up a very, very simple. I actually use Apple's numbers instead of Excel, but you can do the same thing in Excel. This column automatically does the difference between these two. So when I plug in, well, they're the same in that one, but when I plug in 93.3 here, it's automatically going to do 93.3 minus 91.4, and it's going to spit out a value. So I can do the changes there. So this is automated. The same thing goes for here. So this rank column for the perf rank is automatically doing the difference between these two, so that I can get that a little easily.
Excellent. That was pretty much what we had in the chat room.
Okay.
Somebody asked how often the groupings are updated, but I think we sort of covered that. It's
we try to keep it going. We try to make as many changes as we have to on a daily basis, really. Again, we've got a whole StockCharts data team. They do a fantastic job. They work really hard upstairs, and they always appreciate your input. Though, if you catch something that needs a scooter value or anything like that, or there's a stock actually that you want to add, or an ETF that you want to add, mutual fund, let us know. We add that stuff. We do have a symbol request page, so you can actually put in symbol requests and things like that. So,
excellent.
Yep.
One other thing that I would point out is, Grayson, about the scooters, and I've talked about this a little bit on the show, is that you can have a scooter. I looked today to see if there were any examples. Of course, there weren't. But you can have a scooter that jumps to the upside even when the stock is moving lower.
Yeah.
And there was a couple examples over the past couple of weeks, but the rationale behind it is that 30% of the scooter calculations based on the rate of change using 125 days.
Mm-hmm.
And so if a company had a huge gap down 125 days ago, you could actually have a stock that's going down today, but because the rate of change jumps from 120, once that gap is gone, and now you're calculating that rate of change from a much lower level from back at the beginning of the period, that can result in a big jump in the scooter. I've seen stocks jump as many as 20 points in their scooter rank when a big gap disappears from the past history. So I just wanted to point that out. Sometimes what you see and what you expect to see is a big move up when the scooter is rising, but you can get that one-day jump without a stock even moving higher.
Yeah, and kind of related to that too, one thing that throws people for a loop sometimes with the scooter value is that they expect everything to be low in really, really bearish conditions, for example. But it's a relative measure. So we're ranking this group. So even if every single stock in the large cap group was going down really, really sharply, which wouldn't happen, but let's say hypothetically every single stock in that large cap group is just absolutely getting hammered to the downside. Well, something still has to be 99.9. Maybe not 99.9 specifically, but something still has to be up at the top of the list, the ranking, and something still has to be at the bottom. So no two stocks can occupy the same number. So sometimes you'll have, like, in really strong bear market conditions or something like that, even when everything is going down, you'll still end up with stuff that has kind of a high scooter value because it's relative. It's saying technically this is stronger than other things, but that doesn't mean that it's super, super strong and you want to trade it. So actually one thing that's interesting for me, like with these, I'm looking at the sector rotation spreadsheet. So you'll see shifts in this. Right now, you've got 2 up in the 90s, 3 in the 80s, and a bunch in the 70s, and everything except for financials above 50. That's kind of unusual. These are all relatively high numbers. They'll actually shift at some points, and you'll have primarily all of them are below 50. And that actually sends an interesting signal to me. I kind of keep an eye on individually where these are, but also as a whole, kind of, you know, where this block is in the 0 to 100 ranking list. So anyways, that's what I got.
Excellent. All right. Well, we're getting very close to the 10 and 10. I think we've covered most of the questions, but
sure,
if you could go in and maybe lurk in the chat room just a little bit before you leave and make sure.
I will lurk. I will do some lurking.
Yes, stalking and lurking.
Stalking and lurking. There you go. New blog title or something.
All right. Okay. So Tom, it looks like he is back here in the room, but I'm going to go ahead and move on to the 10 and 10. And so let me go ahead and grab and let you guys see what we have here. All good there, Tom? Just making sure he's still there.
I am back, but I'm telling you, I'm having a lot of internet connection issues, but we'll try to get through this.
Yeah, if not, I will certainly just take over right away. Okay, so here we go. This is what we currently are showing as far as our RRG. There were almost 30 requests. You can see that the majority coming in technology. That's very typical, actually, for us, with healthcare and cyclicals right behind that. Go ahead and vote for your, go ahead and like the symbol requests, and that gives you a vote. Right now, we're tied between Walmart and Adobe. So go on in there and like your request, and that'll be the second one. But the first one is IBM.
All right, I'm going to go through these really fast, but the first one here, IBM's part of the computer services group. And when you look at computer services, we've been consolidating for several months, nearing a breakout. Take a look at IBM. IBM is way below where we were back earlier in the year, trying to strengthen, but we've got serious gap resistance that we need to negotiate around 149. So while the overall group's been trending higher, you can see IBM on a relative basis has been weakening. If we can get through 149, 150 and get some volume coming in, I think we have a chance for some outperformance. But until then, I would be on the sidelines with IBM.
All right. And the most popular just edged out Walmart, Adobe, ADBE. They report after the close. Curious about weak sector rotation.
Yeah, I like Adobe. I like software. I think the stock's been a great performer. It's in software, which has been one of the strongest areas. It is trying to make a breakout today. You know, heading into earnings, I think a lot of good news is already built in when you got a stock, you know, at an all-time high or close to an all-time high. So I might be a little careful again with earnings. But other than, I mean, unless they really drop a bomb, I kind of agree like with what Grayson was talking about earlier with Square. I mean, this is a company that's been a great performer for a while. Probably if it pulls back after earnings, it's just going to be a hiccup. I would look for higher prices down the road.
Okay. Let's see the next one. You know, it was so popular and we haven't looked at it in over a week. Walmart.
Yeah, Walmart, I really like Walmart. I think it's hitting the 20-day moving average. I think you've got a pretty good level of support that has now been established with the low that we saw. This was earnings related gap up to 100 from 90. We pulled back, established that reaction low, started rising. And now as we move back down, I think between the 20-day moving average and this price support area around 94, 95, I think we're going to hold. I'd be a buyer of Walmart.
Okay. The next one I have for you is PSCH, and this is the small cap healthcare ETF.
Yeah, this is an overall group that I've really liked for a while, mostly because I believe that the dollar is going to rise down the road later this year into next year. And so I like small caps, and healthcare has been doing very well. So I think the pullback here on PSCH to test that rising 20-day moving average, that in the past has been a pretty good area of support. I mean, we could go back and see a number of these tests for the most part, we've traded above the 20-day, but when we've gotten there or we've gotten close, it generally has been a great area for entry. So based on that, I would be a buyer. I like the group.
Okay. Next one, Coke.
All right, KO.
CK, or it's the bottling consolidated. So COKE. Sorry about that.
Oh, okay. Well, nice breakout. Volume is a little light on this one for me, so I wouldn't trade it just because I like a little bit more liquidity in my stocks. But there was your breakout level. We did have some decent volume coming off the low. There's your 20-day test, by the way. We have now broken out with a lower PPO. So there is a bit of a concern here in terms of a negative divergence. Let me go ahead and just highlight this. So anytime I get price moving up like that, I just want to be careful, especially if we see a reversing candle. Now, so far, I think we're fine, but volume's been lightening. So if you get a big reversing candle, then I think we could possibly go back to hit price support and that rising 50-day moving average. So for now, I'm okay, but it is overbought, a little stretched, and there is a negative divergence. So there's plenty to be concerned about in the near term.
Okay. STI, SunTrust Banks.
Yeah, this one was on my strong earnings chart list. I don't know what's going on here other than the fact that obviously we had a negative divergence, but you can see the volume, a lot of selling taking place. Banks were hit hard yesterday. I'm not quite sure. I haven't looked at them today as a group, but I'm going to stretch this out just a little bit and see if we can find a good area of support. Really unusual for a bank to hit this hard in a short period of time. Yeah, I mean, I would have liked to have seen the 70 area hold. And what I'm looking at is the prior high right here before the breakout at the end of July. See the volume coming at the end of July, and we cleared this prior high. We hadn't gone back and tested that area. And what we might see, this was actually a gap down or a gap up from here. What we could see is a tail being left in this zone and a recovery back up above 69, 69 and a half. I think if I'm in this one, that's really what I want to see, because barring that, if we don't hold, I think we've got the potential maybe of going all the way back down 63, 64, something like that. So I would be a little careful with SunTrust. Look for a potential reversal this afternoon.
Okay. Fairly interesting chart here, I have to say. Caterpillar, CAT.
All right. Caterpillar, part of a group that really has struggled this year with all the tariff concerns and also being a large cap with a rising dollar. I think there are some headwinds going against Caterpillar here. We're up testing some overhead resistance, so I think if we can break out above that, maybe we can begin to start to. I'm just going to there's a gap right in here that you can see. We came back up. We got into the middle of that gap, couldn't get through. We're doing the same thing today. PPO is looking better, but PPO can give you false signals if we're sideways consolidating. So I want to see this breakout. I'm not going to be overly bullish based on the PPO unless we can get the breakout above, say, 147.5, 148. If we can close above that level, then I would think that maybe we have a run in us, perhaps up to about that 160 area.
All right. I do not like this chart. Kemet, KEM.
All right, KEM. Yeah, I have to agree with you on this one. There's not a whole lot to like here. It was potentially putting in an inverse head and shoulder, but that completely fell apart. There was the neckline right there. So off of an uptrend, you come down, you put in a left shoulder, you bounce, left side of the neckline, put in a lower low, that's the head. Beautiful. Usually a downtrend, you have lower lows and lower highs. So when you go back up and you test a prior reaction high like this, it starts to give me a little bit of a feeling that maybe the downtrend is about to end. But you can see that KEM continued moving lower, volume has picked up, and now I'm not really seeing, the next area of key support I would have thought would have been around 21, and we just went right through that. So I'm not seeing anything again now until down below 18. So I'm not a fan here. I agree with you, Erin. I'd stay away.
Yep. I see an intermediate term head and shoulders there, and it's got a long way to go down before that measurement is hit. So
Yep.
All right. So how about Square SQ?
All right. Well, we talked about this one with Grayson. I think it's a great stock. Overbought, clearly, but pullbacks are opportunities to get in. I think that eventually we'll probably get a negative divergence. Maybe things will start to slow down, and then we'll get a 50-day test. But that's, who's to say when that's going to happen? Look at the PPO, which has been almost above the zero line all year. So even when you come down and have some weakness, tends to hold price support and then just simply rebound again back to the upside. Financial administration stocks have done very well in 2018. I think the stock looks good. I'd be careful about just jumping in because I do think it's overbought, but a 20-day test and certainly a 50-day test would get my attention.
Okay, and the last one, and I like this chart if we get a breakout in the short term, CORT, C-O-R-T.
It's beginning to show better, but I don't like the lack of volume. Maybe this is an exhaustive gap, pretty big volume. We gapped down, I printed that nice hollow candle, and we're starting to move up again. Anytime I try to call a bottom, usually I lose money. So I would just say this. If you're looking at this as the start of an uptrend, then you shouldn't be losing 20-day moving average support. And so far, you can see over the past several times, attempts down at the 20, we've been holding and moving back up, which when you're in a downtrend, the exact opposite is normally true. So it's starting to show some pretty good signs, but I'm not seeing signs of accumulation at this point. You did have a lot of support around 14 to 15 on the way down. Now it seems like that 14 to 15 area is an area to watch to the upside. So perhaps if we can get above 15, and I'd really like to see some volume coming in, then maybe we've got a bottom. We did have a lower low and a higher PPO. So we did have a positive divergence, mark that bottom, and we went through the 50. I just want to see some volume coming in. Other than that, I think technically it's definitely improved. And let's see if we can get some confirmation here.
All right. Sounds good. That concludes the 10 and 10. And here are the symbols that we went over. You can find those. I should have those up shortly after the show with the Market Watchers live chart list. You can just go to our blog page and the link is at the top, and then you can call up those exact same charts, save them to your own chart list, save the chart styles maybe that you like. It's a great way to build some chart lists. So go ahead and check out the Market Watchers live recap and blog for the link to our Market Watchers live chart list. All right, time for our final market update. It's looking pretty good out there. Let's go take a peek. Here we go. All right. Markets are currently up pretty much across the board here. We've got Dow up, it's just over 26,123. And we can see the S&P has hit intraday highs. It looks like it's pulling back a little bit off of those highs, but still looking pretty good. NASDAQ is keeping up with the others, which is good because we did not see that yesterday. OEX, S&P 100 similarly hit intraday highs, pulling back. S&P 400 is pulled back about half the gains it had this morning, but it's looking pretty good. It's heading back up toward those intraday highs. Russell 2000 up slightly. And the TSX is on the negative side currently. It did open lower and it came back to life, but it's pulling back just again to go back toward those intraday lows, and actually lows that we saw the prior 2 days. TNX, the 10-year Treasury yield, is down somewhat, currently reading at 2.957, and UUP, big gap down, started to make a comeback, but has pulled back and is currently reading at 2508. GLD is also down, which is rather unusual. You usually see the reverse divergence there between the dollar and gold. So I would have expected to see gold up higher, but it is not, which suggests there are a lot of sellers out there of gold currently. GLD reading at 113.87. TLT is on its way up. I spoke very bearishly about it yesterday, so it doesn't surprise me to see it up almost 50 cents at 119.41. We also can see USO gap down, hit its intraday low, and is now consolidating sideways, currently at 14.45, down almost 2.25%. And that's all I had for our final market update. Did you have anything you'd like to add, Tom?
Well, I wanted to just bring up, and I'm having more issues with the internet, so hopefully you'll be able to follow along here. But I did want to just mention IFF. This is one of the strongest scooter movers, and we talked about scooters earlier. But you can see the IFF price is up about almost 5% today, and it seems to have turned the corner after a huge down move back in May, a little bit of basing. Now we put in a move to the upside, a higher low, and now putting in a higher high. And check out the volume coming in. So I just wanted to point out this is one of those big scooter movers today, looking pretty good on international flavors and fragrances.
All right, excellent. All right, let's go ahead and move into our final segment, chart breakouts. I know I found quite a few of them. I'm looking forward to sharing. And Tom, we'll see what we can get in for you before we are seeing some internet issues there for Tom, but hey, there's a hurricane out that way. So, okay. So I guess I'll give it a start here, Tom. Let me go ahead and grab this. All righty. Okay, so I had about, I think I have 6 or 7 here that I wanted to point out. These are charts that I'm seeing some important breakouts with, really a nice setup as far as the kind of indicators that I use and what I'm looking for. So I tried to find breakouts that are occurring over some important resistance or declining tops trend lines, but that also have what I consider a positive indicator setup. Now, granted, some of these, because they are chart breakouts, have really moved quite high today, which is why they came to my attention. For example, let's start with Abbott Laboratories. I think this one's looking pretty healthy. We did get that breakout, so it is up over 1.25% today. But I don't know that you need to wait for much of a pullback here, because it's a healthy breakout, but it's not, taken off too high. So I think it's still worthwhile. You probably don't need to wait for much of a pullback. I really like the setup here on the PMO, and look at the OBV volume. It's been trending up since early July, as has the PMO. And when you've got a scooter just under 75 or really in the top half, that's telling you there is some internal strength there as well as relative strength. So Abbott Laboratories was one that I liked, and I'm going to move it to the weekly chart very quickly. And you can see we are making new all-time highs. We don't have a parabolic move here, so I wouldn't be too worried about that either. There's a couple of interesting things on this weekly chart that I'm going to point out. And number one is just some things that have happened previously that I think are interesting that you can see here. So first of all, I see this this ascending triangle on the weekly chart that did execute. And with these, if you want to do a upside target, you can go to the height of the pattern from the back end here, and then you can just drag that up, and that gives you your minimum upside target. So there's still a lot of room to run right now based off of this weekly chart pattern. And then look at that lovely PMO buy signal on the weekly chart. So I thought that one was interesting breakout to look at. This is a global dividend income fund. And again, I'm seeing a lot of these ascending triangles. These are bullish patterns. Look at the PMO, it is turning up. Some may say, well, you've got PMO bottoms that are moving lower while price bottoms are moving higher. That's actually not a negative divergence. That is a reverse divergence, and those are generally a good thing. So you're seeing price, it is moving higher, but we're seeing some unwinding of the indicator to the, moving lower. So I think of that as a good thing. It's sort of it's decompressing. And it makes sense when you're forming, overhead resistance like this, but we are getting the breakout right now on ETG. So I thought that one was interesting. It is rather low volume, so just, be aware of that. All right, HIFR, infra REIT. Interesting one, right? Let me get this. It looks a little blurry to me. There we go. All right, so you can see the breakout that is occurring along the resistance that was formed pretty much all during August. It doesn't line up that well with some of our previous areas, although this is, you're getting some touches back here for overhead resistance, but we have now broken out. We'd already broken out above this declining tops trend line, and look at the setup on this PMO and the OBV and the scooter. I think this one's looking very nice. Again, rather low volume, so I always do warn about that. That can mean there could be some manipulation. I'm not seeing too much volatility here to the point where I would be overly worried about that. But you can see right here in the thumbnail too, the 20 is getting ready to move above the 50-day EMA, which is also positive. So I think HIFR has a really interesting breakout right now. Hilton Worldwide. Look at that breakout. The only thing that worries me when I look at this, and I could probably move this to a 10-minute bar. I think I have one of those in here, right? No, it's down here. I want to move this just quickly to a 10-minute bar chart. There we go. What concerns me is you get the big pop, and then you get price moving its way back down all day long. So that worries me just a little bit about Hilton, but everything else looks pretty good here. And, you could think of it as the breakout and the pullback all in one day. So I think that still looks pretty good. Upside target even is that July overhead resistance. PMO bottoms rising. You can see that scooter is rising. OBV not doing exactly what I would like to see, but I think this one looks pretty good, and there really is a lot of upside potential now that we have seen that breakout. 5-day EMA crossing over the 20. A lot of good things going on here. Keurig Dr. Pepper was the other one, and I moved this to a 6-month chart just because it was hard to read on the yearly chart. So this, I think, is a really interesting, you've got this declining tops trend line. It's been in place since mid-July. That started to form, and it has continued all the way down. You really have a declining trend channel, and we're finally seeing a really nice breakout. And that breakout is occurring at the same time the PMO, of course, is turning up. We've almost got the buy signal. Look at the volume starting to come in here on that move to the upside. And I would say your overhead resistance, your potential upside target is all the way up here at about 25.50. So a move from 23.97 or 24 to 25.50 would be a tidy sum to pick up on that breakout. Momenta Pharmaceuticals is another one. All right. Okay, so we can see that the PMO is about ready to have its buy signal. I'm seeing the OBV trending up mostly, and the scooter is in the hot zone. So this has got some nice relative strength. We did get the breakout. I'm noticing since I pulled this out earlier that we have pulled back down below that resistance level, and it's down 2.25% today. But we still have a very nice PMO setup. I would add this one to the watch list, because if we can get that breakout again, or if you want to get in now and set a tight stop, you could certainly do that. But this one's looking interesting as far as the current breakout. It really had the breakout yesterday, and it's pulled back. It's pulling back to just below that support level, the breakout level. So not as good a setup as some of these others I've just shown you. And finally, the last one, TPG Specialty Lending. Look at that beautiful breakout from an ascending triangle, PMO turning up, And, we're up over 1.8% right now, but I would expect, a move. Probably want to wait for the pullback on this. This is a pretty sizable move. But if we want to go and do the measurement here, as far as a possible upside potential, there you go. It's about the size of the pattern from this low to that low. And then I'll just drag up a copy. So we still have some pretty good upside potential right now. A 3.45% move. I would call that good. Of course, you've done 1.8% of it already. So that's why I was saying I would probably wait for the pullback, but I think that one looks pretty good as well. All right, Tom, you there? Oh, yes, no.
I'm here.
Okay.
Can you hear me?
Yep.
Okay. All right. Yeah, I'm going to go ahead and take it, but I'll tell you, the internet is going in and out. It's so bad. I really apologize. Hopefully I can get through this. What I wanted to look at is the broadcasting and entertainment index in particular, because we are seeing a breakout. You can see that back in June and July, we were putting in higher highs. We had a lower PPO, and we ended up going through about 6-7 weeks of sideways consolidation. And you can see that this daily PPO worked its way almost all the way back to the center line. We got our 50-day test, which is what I look for, and now we're getting the breakout. So I think that this is a group that could outperform. However, I do want to just point out that when you look at the relative strength of the group versus the S&P 500, this has been a very difficult area for about the past year. Well, from May of 2017 all the way through June of 2018, so a little more than a year. But we have started to rebound, and whether or not this is the start of it or whether it's going to be similar to a couple of these other relative bounces where we then go back down, I just want you to be aware that on a relative basis, if the money starts rotating away from this group again, you want to be careful if you're playing breakouts in this group. This is a big difference in playing a breakout than in an area like software, where the money has been rotating just feverishly into that group. When you look back over the last year and a half or so, that has not been the case with broadcasting and entertainment. So I don't think all chart breakouts are created equal. And I think you just need to be a little bit aware of what's been going on in terms of rotation here. But having said that, I don't want to ignore the breakout that's taking place here on the short-term basis anyway, because it could provide some nice opportunities on stocks within this space. So let's take a look at some of the stocks within the group that are performing pretty solidly. First is DISCA, which is Discovery. You can see a beautiful move up. First, we had a little flag, nice move up in a downtrend for a while, but that channel broke, and once it broke, look what it's led to. Beautiful breakout into Discovery. The 2975 area I would watch for on a pullback. That could be an interesting entry area. Pandora, I know I've spoken about Pandora in the past. Sideways consolidation, but we had a nice move up. Volume trends have been very strong, and we are trending higher. Beautiful engulfing, or maybe that's a piercing candle, can't quite tell, but right off the 20-day moving average. And then straight up stock in the last 5 days has been up roughly 18%, something like that, close to 20%. But anyway, Pandora, I think, looks really good. Great breakout. Pull back to about 9.25, 930 is what I might look for here. Great television network, GTN. This one hasn't made the breakout, but after a huge run up back in June with very heavy volume, seeing a lot of consolidation, and now we've got a PPO that's back close to that center line. This is one that hasn't made a breakout. But if it gets much above 1750, it's also got a fairly long-term resistance level just above 1750 as well. So I would just keep this one on my radar. This is one that could make a very, very significant breakout. HMTV, this is a rather illiquid stock. Notice that the volume here, you can see today only 11,000 shares. But I really just wanted to point it out from a technical perspective to show that I think that this would be a really nice trade if it were more liquid, if we could get this close above $14 after making a big move back from May through June, had a pretty significant pullback on lighter volume, and then the volume started to pick back up again as we made a run for this $14 area. Today's high is the high of 2018. So we'll have to see whether or not we can close strong, but I would avoid it simply because of the volume. NXST is one of my favorites in this space right now. Just looking at the chart, you can see that we have, and I'm going to stretch it out to a year. We are consolidating, and you can see the volume has been shrinking during this consolidation period. Off of the high here, had a slightly lower PPO. We went back to that 50-day moving average and price support, and now we've been rising again off of it. This is has the makings of like an ascending triangle off of an uptrend. Not exactly. I don't know if we got quite the equal high, pretty close. But 83.5, 84, if we see a breakout above that level and the volume starts to come in, I think Nexstar would be a stock to keep an eye on. And then just the last two very quickly. Sirius Satellite, SIRI, was in a nice uptrend, pulled back, and I think is consolidating, but needs to get through $7.30. High today, 7.25. And then the last one is Comcast. Believe it or not, Comcast only has a scooter around 50. And it's because the 125-day rate of change when you go back here is still weak. But I think that will improve as these other earlier days begin to drop off. And what we have is a stock that's been uptrending, holding on to its rising 20-day, and today trying to make a breakout. So Comcast is another one. So all of these were in that broadcasting group. I just thought they were interesting and worth taking a look at.
Excellent. And there you have all the symbols that the two of us just went through, if you're interested in following up on those. And that brings us to the close of this lovely show that we had today. I know there were some questions in the chat room Grayson did not get to. We'll be forwarding them to him. So hopefully he'll be able to get back to you on some of those. And, oh, there you go. How many of us use scooters?
I am definitely, yes.
Oh, well, and it's pretty obvious that I am, since I don't know, they're on all of my charts when I show them. So,
yeah.
And, somebody did ask whether they use them as a oversold indicator. If the scooter is very low. I like to find scooters that are mid-range and rising or already in that hot zone. Typically, I don't want to get too close to anything where it's below the 50 mark. What about you?
Well, scooter, keep in mind, it's a relative. It's a way to rank stocks on a relative basis. I would not be using it as overbought and oversold. And I think Grayson explained that pretty well earlier when he was saying that in a bear market, you still have to have stocks with scooters from 0 to 99, just like you do in a bull market. They're being ranked versus one another on a relative basis. So in a bear market, stocks with a 70 scooter ranking probably aren't going to look nearly as good as stocks in a bull market with a scooter rank of 70. So just kind of keep that in mind. It really depends a little bit on the type of market you're in.
Yeah, that makes complete and total sense.
All right. Well, I'm going to be finalizing my...
Yeah, I was going to say with the poll, I hope that 6% does change soon. That people know what the scooter is now after today's show.
Yeah, they should. All right. Well, I have got last-minute hurricane preparedness plans to take care of this afternoon. I do want to wish everybody well this weekend. I will probably not be here tomorrow. Prayers to everybody on the coastline. I know it's going to be a rough weekend, but hope everybody pulls through it okay. Also, I want to thank everybody for being with us today. Please remember to complete the survey as you exit. I'd like to get your feedback. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Thursday afternoon, everybody. Enjoy your Friday, as I won't likely be here, but we will have Mary Ellen McGonigal in to join Erin. And I will see you back here on Monday. Be safe and happy trading.